After that, we got our game back on and we stampeded out to get that second round funding. In many times, we went to multiple banks when it looked like the funding could run out or the bank couldn't service our clients. I spent 2 or 3 weekends, Saturday and Sundays, working on applications, as did our team. The rules changed from the first round of funding to the second, or perhaps they'd not been made up yet. We had almost 50 FAQs, which is an acronym for frequently asked questions, released by the Treasury and SBA, with at least one coming out per day. The responses to the FAQs represent policy or guidelines which we have to follow. And every day we had a change. In mid-May, the forgiveness application came out. We pored over it, digested it, and actually had even more questions. No guidance was forthcoming as the SBA watched legislation begin to move in the House to make changes to the PPP. And here we are. So we have the PPP Flexibility Act, as we're going to call it. Aaron, Ashley, and I will be going over the Act as the forgiveness calculator as it pertains to the FTE and wages. These are the important things that you need to remember and figure out. So I'm going to briefly go over some of the highlights. I want to emphasize that these changes were enacted to help small businesses keep more of the money that they were given under PPP. It is not always going to be to your advantage to follow some of these changes if you have the ability to. You may choose not to. But these were challenges that we faced because we used a payroll funding that was 2.5 months of average wages in 2019, but we had only 8 weeks to spend the money. Shareholder benefits and retirement payments were taken away, and those were in the original loan applications because there seemed to be permissible under CARES. Most businesses, including healthcare, are still not fully operational. At least they are not on par with pre-COVID, and it's unpredictable as to when they will be. So these changes are really meant to be friendly. They're meant to help you to spend 100% of your money and be forgiven 100%. So we're going to try with you to maximize that funding. And I'm going to just go over, and we'll go over this in more detail later when we get to some of the more sophisticated changes that they made. But the first and most important change, and you've read about this, I'm sure, is that the covered period, which was 8 weeks from the date you got your funding, has now been extended to 24 weeks. So if you choose, you can have 24 weeks to actually complete the obligations for forgiveness in the covered period. That covered period ends at the earlier of 24 weeks or December 31. So now you'll have until December 31, 2020 to restore wages and FTEs. So what Congress did was they substituted June 30 for December 31. They did lower the bar for payroll. It used to be a 75-25 split. They lowered it to 60%. So payroll as a percentage of your loan has to exceed 60%. That is really not a hard benchmark for healthcare because you're a service business. but this did help capital-intensive businesses and retail and restaurants tremendously. We have additional FTE exclusions, and I think you'll find these very beneficial, and that would apply regardless. The other thing that changed, originally in the CARES Act, we had 10 years to repay these loans. The SBA changed that to 2 years, and now Congress has given us 5 years to repay. So we have a longer time period for any piece that is not forgivable to have that repaid. The last thing is the deferral of payroll taxes. This is not an item that we've really brought up to any of our clients, or very few, because if you were getting PPP funds, you weren't eligible for this. Now they've made it eligible if you receive PPP funding to have a deferral of payroll taxes, and we'll go over that again as well. How does this information fit in with our current plan? Well, the first phase of this is we're going to tell you what's changed. We're going to have to take a pause because we may now, with our new facts, decide that the strategy or the path that we're on is not now the best strategy to follow or the path to follow. We may choose to go with a longer covered period, and we also may choose to incorporate some of these new benefits into our new plan. So I do want to talk about probably the easiest piece, the part that didn't change or didn't change much. Our non-payroll costs have changed only in that there's a larger percentage allowable now, and we actually have 4 more months of spending if we choose the longer duration. A couple of things that I want to mention for our clients. For most of you, you finished your first month. You should have copies of your leases already. So any mortgage contract or interest paid on personal property, get the paperwork out and get that into a file. What some of our clients don't understand is that obligations or payments, loans that are secured by personal property, which means any kind of equipment, computer equipment, lasers, scanners, whatever it is, can be office furniture and equipment, that interest is actually part of the forgivable component. People understand what rent of the facility is, but you also can take rent for personal property. Personal property includes copy leases, stamp postage machines, anything that you have a signed contract for and you're paying monthly for a piece of equipment or something that you can, is tangible as opposed to intangible, qualifies. And of course, utility payments for electric, water, sewer, telephone, internet, and gas. All of these obligations should have been in place before February 15th, 2020. Remember that at the end of this covered period, you are going to have to submit all of this documentation, including all of your electric bills, water bills, sewer bills, whatever, to an underwriter for the SBA. So those of you who've gotten a bank mortgage understand the paperwork that they go through. They're very thorough, and so you will be required to go ahead and submit this. So what we're recommending is at the end of each month, we just had a month end, get all of your ducks in a row and get copies of all these materials. If we're helping you with your forgiveness application, you can send them to us. Otherwise, keep them in that file. We're going to put them in a PDF. So remember, payment of non-payroll costs. It's paid during the covered period, or it's incurred during the covered period, even if it's paid on, or before the next billing date, even if it's after the covered period. So in other words, while I stumbled on that, that just simply means if you have an electric bill for May, and you're in your covered period, but you don't pay until June, even if that was after the covered period, you'd still be able to take it. Okay, we're going to pass this mic on to Erin Hentrick, and she's going to talk about FTE hours, revisited for the third time. Right, Erin?
Yes.
Thank you, Kathy.
All right, so first things first, what you want to do is figure out your FTE count for your measurement date, which is your reference period that you'll be using to compare for the rest of the application. They have given you 3 different options to calculate the FTE count. So you can either pick January 1st, 2020 through February 29th, 2020, February 15th, 2019 through June 30th, 2019. Or if you have seasonal employees, you can pick one of the 2 or any 12 consecutive week period between May 1st, 2019 and September 15th, 2019. A question we've received on this is, do you need to calculate all of these measurement periods? You do not. It would be best just to analyze your business, think about your normal employees, and if you have seasonality, you may want to pick something different. But for the most part, you probably would want to pick January 1st through February 29th, as that's your most current employee listing. To do the FTE count, they've given you 2 different methods to figure this out. So they have the normal method, which is you take the average hours, you divide by 40, and that gets you your count, and you round it to the nearest tenth. So if you have anybody that works 40 hours, that would be 1. Anybody under that, you would divide by 40 and round to the nearest tenth. Then there's also the simplified method, which is if they work 40 or more, you just assign them 1, and if they work anything under 40, you assign it 0.5. Very simple. One thing to note is the maximum you can give a person is 1. So if they work 50 hours, there's still 1. And for the methods, you have to pick one and use it consistently throughout the application. So here's an example of the FTE count. I just want to show you this because you do need to calculate both ways to see which way works for you. It depends on your employee mix. If you've got a few employees that are very part-time, you may be better off going with the normal method. Or if you have, most employees are full-time, you may want to just go with the simplified method. It'd be best to calculate it both ways. There are some exceptions when doing your FTE count. If you have sent out a good faith written offer to rehire your employees and they have refused to come back, you do not have to count them. Also, if during the covered period, so that is when you have your loan and you start using the money, someone was fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours. So the SBA does want proof of this. All they say is it must be written. We would suggest that you have the employee sign something. The more the better. There is also a safe harbor. With the safe harbor, you have to meet both conditions. You have to have reduced your FTE levels between February 15th, 2020 and April 26th. And then you look at February 15th, 2020. And if you've reduced it, then you have to restore them by February 15th, or by December 31st. I apologize. This will make sense. I will go through an example. It's confusing. So this is a little decision tree I put together because there is so many different options of where to go. So what I'm going to do is do a quick little example. So I want to put some numbers in here. So first one, easy. You have 5 in your measurement period, 5 in your covered period. You're good. You have no loan forgiveness reduction. Let's say you have 5 during your measurement period and you have 4 during your covered period. So now you've reduced your employee count, you have an issue. So now you have to go to your safe harbor. During February 15th to April 20th, February 15th to April 26th, your count was, let's say it was 4. And on February 15th, your count was 5. So you did have a reduction during this period. So you then have to make sure that you get everybody back by December 31st and you qualify for the safe harbor. So let's say you had 5 during February and 5 at February 15th. You did not reduce during this safe harbor period, so you don't qualify for it and you have a loan reduction. Clear as mud, right? All right. Okay. With the new Payroll Protection Act that just came out last week, they have given us 3 more ways to get out of this reduction issue. So the first is you have to have both qualifications. So you have the inability to rehire employees who are employed at February 15th, and you also can't rehire similarly qualified employees. So this one's a little tricky because of the second part. You have to also not be able to rehire someone who can do that same job. The second part is if you have the inability to return the same level of business due to restrictions from compliance issues. So this, for instance, on a restaurant, they can't go back, they can only be at 50%, so they can't really rehire everybody back. This would fall under that guideline.
Although, Erin, would it also work if you had a physician employee who quit and you were unable to fill that position because it's hard to find?
I can see that working because it does take a while to find somebody, credential them, and get them on payroll that could qualify. So this is a look at the application. So what you're going to do is fill out each employee. You put each of their average FTEs, either the simplified method or the normal method. You add them up, box 2 and box 5, and you put them on the worksheet. If your average FTE count during your covered period is equal or more than your measurement period that you calculated at the beginning, you're good to go. If not, then you have to run through the safe harbors and the exemptions and all of that. I did want to put a little example because this has come up and it is kind of a little tricky one. Because the measurement period is January through February, you can have a problem if you have an employee who has left in March, because they're going to be in your measurement period, but they won't be in your covered period. So, for instance, you have an employee who moves out of state on March 15th. They're going to be in your employee count, they won't be in your covered period. So you may have an issue unless you can get around one of the exceptions or qualify for the safe harbor. So watch out for that one. Next up, Ashley is going to go over salary and wage reductions.
All right, thank you for that, Erin. So as Erin went over the FTE reductions, there's one other reduction that could trip you up on the forgiveness, and that's the salary and wage reductions. So with this, it's time to break out more of those payroll reports. You might, similar to the FTE reductions, just have to compare 2 periods, your covered period and your measurement period. But if you fail that first test, there are some safe harbors. So at the very least, you're going to need the covered period, which is now the 24-week period, unless you opt to stay with the 8 weeks, and then the measurement period, which is Q1 of this year, January 1 through March 31st. That would be the first test that you would compare for any reductions of more than 75%. If you don't meet that, you have safe harbors of comparing to wages as of February 15th, or then those weird dates that Erin mentioned, the February 15th to April 26th. And then the last safe harbor is now December 31st, which used to be June 30th. So before we jump into the worksheets, and we've got some snippets here right from the loan application as well, you want to know who do you have to do this for and who don't you have to do this for. So the worksheets are for each employee. It's not overall, it's employee by employee, but it's only for those paid less than $100,000. So we'll go into what exactly that means in a moment, but generally speaking, the way it's worded at the moment is it's comparing 2019 and were they paid more than $100,000 on an annualized basis in any single pay period. So it doesn't necessarily mean their W-2 was over 100,000. So keep that in mind, that if they fall under that, you could have paid them a bonus, they would be over the limit and you don't have to worry about the reduction for them. This is also to be done for those that are employed during the covered period. So if someone was terminated and they weren't furloughed, they're no longer employed by you, you're not rehiring them, then again, you don't have to worry about this. So let's dig in for anybody that was paid less than $100,000. Your very first step is to compare the average pay to that employee for the covered period, the 24 weeks or 8 weeks, and compare that to the first quarter of 2020. With the step one, that's what A and B are, you divide those two. As long as you didn't reduce that employee's pay by more than 75%, then you stop here and you're done. You don't have to go to worksheets 2 and 3. But however, if you fail that test, perhaps you reduce them to 70%, you'll have to go to step 2. And that's where these additional payroll reports kick in. And that's where your first safe harbor is to compare what were you paying them as of February 15th and compare that to the average of what you paid them February 15th through April 26th of this year. If you meet the 75% rule there, again, stop, and you're fine for that employee. If not, there's one more safe harbor, and that would be comparing, again, those February 15th rate of pay to that restoration date that is pushed now to December 31st. So quite a few different safe harbors there to get you out of having to deal with a reduction. If you didn't meet any of those thresholds, you would have to proceed to step 3, and that is calculating the dollar amount of your reduction in forgiveness. So what this means is you paid them less than 75% on average you paid them less than 75% of either the average of the measurement period or those safe harbors we just discussed. And so then this just hotkeys again from the forgiveness application as it stands right now. There is a note there on the bottom box, a caution, this still mentions multiplying by 8 weeks. It should be updated to 24 weeks when they revise the application. So I'm sure this has you thinking, well, how can I get out of this? So there's a couple different considerations and scenarios. So what if you reduced everyone to 75% of their pay from first quarter? Then yes, you're fine, because the reduction only kicks in when you're reduced below 75%. So you wouldn't have to worry about it, but again, compare it to that average of first quarter. So then you're thinking, well, I did have to reduce one employee below 75%, then you may need some action needed if they're not one of those other carve-outs we talked about, but you have until December 31st to fix that. And then reminder here again that you're not looking at anyone paid over $100,000. And as it's written, that is for any pay period in 2019, so not a total. Gotta love sound effects. All right, and then the last question here is, what if I laid off an employee and they were refused to be rehired? So that is a specific safe harbor, similar to the FTE count, that you can exclude them if you offered to rehire them at the same rate of pay and hours and they refused. And just to point out there, that same rate of pay to bring them back up to is before, if you had laid them off, or if before you laid them off you reduced their hours, you've got to get it back to what made them whole. And a couple more exclusions here and concerns are, well, wait a minute, could I get penalized for this person twice for both the FTE and wage reductions? So if you're looking at someone who was full-time and went to part-time, and the answer to that is a great answer. It is no. Well, it's not great. It's semi-great. You still have to count them in the FTE reduction if they don't meet a safe harbor, but they're excluded from the wage reduction, so you don't get double penalized. And then, of course, how can I exclude all employees? So this can be done with that same rule as the FTEs, if you restore everyone to the February 15th level, or you had less than 25% reductions by December 31st. So, of course, there's certainly more scenarios here, and we're hoping that the SBA is going to give us some additional safe harbors to work out some of that, some of the other issues that you may have. And I will turn it back over here to Kathy to wrap us up.
Thank you, Ashley. So the last one is our deferral of payroll taxes. So Section 2302 of CARES currently allows employers to defer the payment of the employer portion of Social Security taxes and the railroad retirement taxes. So that's the amount that is the employer match, not what you withheld from the employee. So it'd be sort of half of that piece, the total Medicare FICA piece. That was not allowed. We did have need out there, particularly with the offices that were shut down, but since they were all moving to get PPP, they weren't eligible. So now this period was March 27th through December 31, 2020. That's still intact. You would have no failure to deposit penalties, so meaning you don't have any of the normal payroll tax penalties. If you defer taxes, those deposits are due December 31, 2021, 50%, and the remainder is due in 2022. This also applies to the self-employed persons. So to be honest with you, I think that's where we're going to see the most use of this. So as we're doing our Q2 estimated tax payments, well, it's actually Q1 and 2 bundled, and so there's a big gulp. We're preparing these right now. If we have a piece of that for someone who's just self-employed, like a partner, or someone who, mainly partners, we could use this as a deferral of those taxes. Of course, the downside is, you have to pay it sometime. But that is something that we'll probably use. I would say that most of our clients have HHS money, And so there's really not a need to do this at this time. But it is there. I wanted to make sure that everybody was aware of it. And while I'm on the subject of payroll taxes, I still believe that there probably is opportunity for all of you or some of you. I feel like we've talked to most everyone to potentially get some of the other credits, the FMLA and the sick credits. We've been talking about it for several months now, but you know, as sometimes we hear your stories about, as we go through the FTEs and I hear, oh, well, so-and-so is at home and they don't want to come back. Okay, why are they home? Are they caring for someone with COVID? You know, what's the reason, and when were they home? So go back and take a look at your employee census and talk to one of our payroll specialists or us, and just ask those questions, because we want to make sure that you get the, you know, the benefit that you can. Basically, their wages are almost 100% paid by the government, so you might as well take advantage of that. So we're pretty much on time now. We wanted to keep this short and targeted, but we do have time for questions, and I know it's confusing, particularly, in my opinion, Aaron's piece. So you heard the tripping of the wires. We're here in a conference room. So we will be happy to take questions from any of you right now. Remember that your question is probably a question that someone else has. Don't be shy about asking it. So Bethany is our moderator, and she's going to take those questions. Well, she's not going to answer the question, but we are.
Thank you. And we have a few questions that came through chat along with all the questions that were submitted prior to the webinar. So the first one is, just to confirm, if an employee goes out on maternity leave during this time, is that a safe harbor?
From an FTE count, I would believe that would count towards one of the exceptions. That would be that they asked for a reduction in their hours. They asked to go on maternity leave. I think that would qualify as an exception for the FTE count. And for the wages.
And for the wage side, as it stands, they have not clarified that if you've got the FTE safe harbor, will that also count for the wage exclusion? So we hope they will clarify that, because obviously if they're on maternity leave, it's probably well below the 75% of pay. That's normally like 60% of pay. So we'll follow up on that when we get some more SBA guidance to be 100% sure.
And remember, if that person came back, you know, before December 31, and you have restored them fully, you would meet both tests. So you would actually get out of it anyways. I also want to remind, before we take the next question, that SBA had 30 FAQs lined up, which they never released. So we do expect a slew of them coming. They usually release them Friday night at around 7 to 8 p.m. So probably next week we'll be talking about the FAQs. Thank you, Bethany.
Excellent. The next question is, if you kept all of your employees, no layoffs or restrictions, am I correct in assuming that only 8 weekly payments for each employee are forgivable, even though the period has been extended to 24 weeks?
If you need to take advantage of the 24 weeks to get the forgiveness, you certainly should. If you've got, for the 8-week period, if you've got enough compensation in there to get you, and other expenses to get you to forgiveness, then sure, you could go ahead and take the 8-week old rule.
Our experience is in looking at most of our clients that they received more funding than they could actually spend in 8 weeks.
All right, the next question is, when does the application for forgiveness need to be completed by? Where do you get the application?
Oh, we have the application. We have the application that's going to be changed immediately. The SBA, so the process for forgiveness is going to be that it's going to be like the loan application. As Aaron and Ashley explained, we're going to sit down with most of your payroll data and this other non-payroll data and figure out how much the spend was and how much would be forgivable, or you're going to do that. Then you're going to submit it back to the bank that gave you the original loan. They are responsible for adjudicating the loan and for forgiveness. Now, the SBA has, or Congress is trying to get the SBA just to automatically forgive anybody under $150,000, no questions asked. We know they're not supposed to, or they said they're not auditing anybody under $2 million, but they have the right to audit everybody. And those loan processors are very thorough, and they'll have more time now to look at your applications.
The next question. We paid our employees bonuses a few weeks ago to thank them for their hard work during COVID-19. Can we include this in payroll expenses for PPP?
Yes, yes, absolutely. And the added bonus, pun intended, is that if that put them over $100,000, if you did that also in 2019, and that put them over $100,000, then you don't have to consider them for the wage reduction. So double whammy there, that last year you paid them a bonus. You don't have to consider the wage reduction. This year you paid them a bonus, and now it counts for forgiveness.
Wow, Ashley, they'll take that away. You know it.
Yeah, just to put numbers on that, it isn't a big bonus too. So if you gave someone a bonus of $2,000, that's going to put them at the annualized rate of $100,000. So that's fairly easy to get to.
But you still need to spend that money.
Yes, you do still need to spend.
So, you know, that's the strategy. We'll get you out of the penalty, but you still have to spend the money. Thanks, Bethany.
All right. The next question is, I have an employee with a diagnosis of colon cancer last week. She is now taking a medical leave of absence. Will she be exempt?
Again, I think this would be similar to the maternity leave that they've requested reduced hours and you've given it to them. I think they'd be okay for the FTE count. And the same thing, the wages, as long as they're back by December 31st.
Right. That and/or if the SBA will clarify some of these situations that are out of your control,
Right.
that you can't make someone come back to work in that situation, that we're hoping they would clarify you wouldn't be penalized for that.
The next question. Do you have to pre-select duration 8 weeks or 24 weeks, a cover period? What defines this?
Well, the start of the covered period is the day you got your funding. So when 8 weeks finishes, you don't have to make a decision exactly then. You may choose to run it out a little bit longer, but I think you should have some idea of what your strategy is going to be. For some of our clients, they've actually finished their 8 weeks. The ones who got first round funding are done. We cried with them when this passed because they made decisions based on the original CARES Act and subsequent guidance, and they probably would have been better off. Well, they would have been better off from an economic standpoint to have a longer covered period, particularly if you're not really back up full throttle. You know, I suppose there's some break point where you do need everybody back, but if you don't need everyone back, it may be better to just go a little bit longer. And remember, you have to spend the money. You have to keep track of the money that you're spending, because if you don't spend the money, it's not forgiven.
Excellent. Next question. Are employees making more than $100,000 completely excluded from the PPP, or just the amount over 100,000?
Correct. Just the amount over the $100,000 annualized is excluded. So you can count, if they're paid biweekly, up to $3,846 of each biweekly check for them. Anything above that, including health insurance and retirement, employer payments, do not count.
Wonderful. With the multiple changes taking place, is it?
Bethany?
Wait.
Yes.
Bethany, sorry, I just want to clarify that. The shareholders or owners are the ones that then get kicked out of the health insurance and retirement. But if you've got employees that are paid over 100,000, the employees, you can still count the employer paid health insurance and retirement.
And the one other thing that we should point out, any shareholder cannot make more in 2020 during this covered period than they made in 2019. So we have had questions, and it's a brilliant strategy, but they shut us down. Somebody, for example, who made $75,000 last year has a little bit more money for whatever reason, and they want to pay themselves $100,000. That's not doable. Only the $75,000 is counted.
And that's only for the shareholders and owners. That doesn't apply to the employees.
Correct. Only shareholders and owners.
Excellent. The next question is, with multiple changes taking place, is it better to wait for the forgiveness, wait maybe 2 months?
I would think it really depends. If you've run all the numbers and you don't have any issues on any of these different points on your FTE counts, on your wages, anything, you're 100% paid out and you have no questions, you can go ahead and ask for the forgiveness and get it done. If you have some gray areas, maybe you want to wait till they clarify exactly if this is okay, then maybe wait a little bit. We're hoping to get more guidance soon.
Yeah, we don't know if maybe you just cash out if you have spent all your money and you didn't have reductions and that kind of thing, because we're not really sure if they're going to throw any other monkey wrenches into the longer covered period. I'm just going to add, one of the conversations that we had when we first heard about this longer period was, do we get more than our 100,000 annualized over just 8 weeks? Do we get it over 24 weeks now? Mm-hmm. Or who knows? So we're not sure about that piece.
The next question is, can an FTE be replaced by 2 part-time EEs if total hours is full-time?
Yes, you could do that. So if you had one person that worked 40 hours, they would count as one. If you hired two people that worked 20 hours each, that'd be 0.5 each, would still get you to 1.
Wonderful. The next one is, do all utilities need to be registered in the business's name?
Trick question. Who put that in? Somebody on our healthcare team did that.
We did ask, we had some Q&As with some of the banks to ask some of these questions, and I did ask that one, and they, for instance, I'm assuming they're probably asking about a cell phone, because cell phones are not always in the business name, they might be in the owner's name, and they did say it should be in the business name, not an individual's name.
But they were giving their opinion.
Right.
We don't actually have guidance.
And now that you have possibly taking advantage of the 24 weeks, you might or get there for forgiveness with payroll and everything else.
Oh, one other thing I want to add before we move that. Remember what I said about the leases. If you happen to have an entity and you're leasing a building to your operating entity without a lease, just a mortgage payment and a handshake with yourself, make sure that you have a lease before February 15, 2020.
Excellent. The next question is, I was originally using the alternative method. Should I change to the regular method?
It depends. You might not have to be concerned with the alternative period. The reason you went to that was because you were trying to take advantage of paying more dollars in payroll. And now that you have 24 weeks, you probably will get there.
Mm-hmm. But I wouldn't think you would need to change. I would just keep it unless there was, in most instances, the alternative period was more beneficial.
Wonderful. The next question is, if your lease has expired, would your monthly invoice suffice?
Oh. So, well, in that instance, you still have a lease, so you're on a month-to-month lease. So I would think so, because it's not really expired if you're still using the property.
It's the same lease you had in place at February 15th.
Yeah.
So.
If you had employees leave in the first quarter of 2020 and have the documentation to show it, how do you show it on a spreadsheet so you do not get penalized?
So this is kind of where it can hurt you, or it could. If they left between January and February, you just take them out of the FTE count. If they left in March, that's where there's a little gray area, and you might actually get hit with the penalty if you don't meet some of the exceptions or the safe harbor.
We agree it's not fair.
Yeah, it's not. They kind of missed that one.
So maybe guidance, that would be a place where we would look for additional guidance. A little story, my husband's office manager passed away during March. Obviously,
Bring them back.
yeah, so, what do you do? Shouldn't really be penalized.
And on the wage reduction, it starts as of the day of the covered period. So whether that's the day you received the funding or if you did the alternative, so that might be a case where maybe it could give you a benefit if you did the alternative, because that first paycheck you paid someone that is now gone, you might get one of those safe harbors and not have to compare, because the salary schedules in the forgiveness application are for employees that were employed during the covered period.
Excellent. Next question is, can I defer payroll taxes if I'm a sole proprietor?
Yes, you would do that through your estimated tax filings. So you can do that. Great question.
Wonderful. The next one is, what is the point of deferring payroll taxes?
You would defer the payroll taxes if you had a serious cash flow problem. Most of our clients, while we've had some very hard times, have had the benefit of HHS funding. And so far that has been very beneficial, that with the PPP. Most other businesses didn't have that benefit, and in particular, restaurants who are really struggling, they actually probably still don't have cash flow to pay those. Most of them are operating at a loss right now.
Yeah, with the PPP loan, it only covers your gross wages. The employer is still on the hook for the taxes. So although the loan's great, they still got to have the cash flow to pay that.
Right.
Thank you. The next question is, if you are an eligible self-employed individual and you received PPP money to help fund your business during the COVID-19, how do you document payments made during that time to the SBA or your bank?
Right. So the self-employed, if that is a Schedule C, under the original rules, they said you would get forgiveness for 852s, which is 8 weeks of the year worth, so about 15% for forgiveness. So we're hoping, like the $100,000 caps, that they clarify in the FAQs to be released soon, that you now also get that higher percentage, the 24 weeks, 24 of 52.
And I believe it's still based on 2019. You don't have to prove 2020.
Excellent. The next question is, in the first quarter of 2020, 3 employees received bonuses, which are now reflecting as a reduction. Is there a ruling on that will keep us from being penalized? The bonus was the 2019 performance bonus for managers.
So that would be something that, do you take a look at 2019? Did you also give them bonuses then that would have put them over that $100,000 mark in any single pay period in 2019? So likely you're doing this, an annual bonus or quarterly bonus to your providers. So that would cap you out, put you into table 2 over $100,000. You don't have to worry about wage reduction.
If you don't have that, that is kind of a little catch there with this, that if you did pay out bonuses in the first quarter, it will hit you when you calculate your average payroll.
And the next question says, just to confirm, can I apply for forgiveness once my money runs out, or do I have to wait?
No, you do not have to wait. I'm assuming they'll give us a better guidance because SBA hasn't weighed in terms of how we do this, but it was pretty clear in the Act that you could apply for forgiveness before December 31 or the end of a 24-week period.
The next question is, for the early ones on PPP, I know that we have to have the same amount of FTE at the end as we did the beginning. Does this rule still apply? If so, we have some employees that went to part-time when the completed of the 8 weeks happened.
So that may be another consideration, that if by somehow you had spent enough money in the 8-week period to get the forgiveness, then you'd want to stick with 8 weeks. If not, even if they went part-time right after that 8-week cutoff, again, you now have 24 weeks and it's an average. You've got those different safe harbor timings to compare. So it's not an all is lost. You just have to run the numbers to make sure you get them back up. And also, of course, if you restore them by December 31st, you don't have to worry about it at all.
Wonderful. The next question is, can more than 60% be used for payroll?
Yes.
Wonderful. Next question is, oh, sorry.
No, go ahead.
The next question is, I have a lease and pay CAM in addition to the base rent. Do I include both in the calculation?
That's another really great question. In Florida, we pay sales tax on the base rent plus the CAM, but there has been no particular guidance about that. Right now, we just have opinion. It may be a moot point with this extended period, so I'm not sure if it will actually get addressed. But Florida is one of the few states that actually taxes commercial rental property that's owned by, or even commercial rental property. So we do have a case that it's all rent. So we'll see.
And thank you. We are officially at 7 p.m. So Kathy, if you would like to give some closing remarks.
Thank you. Well, we just appreciate everybody's attendance and your questions. We hope that we've answered them to your satisfaction. And it is confusing. It really is. But our goal is to help you to recoup 100% of your loan if we can. So please just keep your questions coming, and we will make sure that we stay on top of all the changes so that we can help you in the best way possible. Thank you very much.
Thank you.
Thank you.